If we go ahead and shift over now to the indexes, we will look at the S&P 500. Okay, so this is the S&P 500 or the SPX, of course. We will pull up the weekly chart. Now, this trough, which we were looking for to form, 1.8 to 212, has likely formed just 1 week early right there, and we are in that rising phase on this minor cycle. Okay, on the upside, you can see our levels here. We have the all-time high at 48.1862, and we have these two levels here from 49.01 up to 49.52. So those are our next two levels on the upside that are in play here on the upside in the S&P 500 as we are just in this intermediate term rising phase. Now, what would change the bias? If we were to lose 46.82, that would shift the bias and say that this rising phase is now over with and you're in that corrective period with our next key trough here that is due 415 to 520 in the S&P 500 weekly time frame. If we shift over to the daily chart, you can see again, what is the bias? The bias is still firmly pointed to the upside here. Yes, we are grinding our way higher, but that is really quite typical after a sharp move up. We are taking a bit of a pause here and likely building some energy for another move higher. In terms of the upside, you can see our levels from 48.44 up to 48.92 and then 49.53 here. What would invalidate the short-term bull thesis here is a move through 46.82 on a daily basis. That would say that this rising phase on these blue dotted cycle brackets here is really over with, and we are in that next corrective period. With our next trough that is not due, if I highlight this for you right here, only until the middle part of March. Okay, we are not there right now. However, I just wanted to highlight our level that would shift the bias. Keep in mind, we also need to see a confirmed shift in the trend, and that is clearly also not happening. But I always have to give you both the upside and downside so that way we are flexible to change.